The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady. And really, we're like on a boat going down the Niagara River, and we're getting closer and closer to the brink of the falls. I wish I could give you what's coming down the pike, but I really don't know. I'm hoping it's a lot less than 3.5 trillion. But anyway, we're going to talk today about New York State, because New York State taxes are really as complicated as the federal, if not more so, quite frankly. And even though the rates are lower, they start at 4% and go up to like 10%, which is a lot of money, but pretty much everybody falls between 4% and almost 7% in that genre. So you figure on a $10,000 deduction that you didn't make properly, it costs you $700 in taxes. So that's a lot of money. So we're gonna talk all about New York State taxes today. 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. And my buddies are here with me. Hey, Tiff.
Hey there,
Tiffany
Esther.
Fabian.
Happy Saturday.
Happy Saturday to you. And Christopher Fabian.
Hello, Esther.
Hello, Christopher. Okay, so it's fall. We got 3 months till the big day, starting January 1st, 2022. And I was just reading an article just before the beginning of the show that says we don't know whether they're going to make these changes effective January the 1st, or if they're going to make them retroactive. So it's kind of a crystal ball event. Nobody knows for sure, but I will tell you, big changes coming up, big changes. If these things go through the way they got it right now, we have a lot to talk about in the future. But again, we want to talk about tax school. Tax school's in the swing of things, right?
It is, and our second flight is about to take off soon. And so the classes meet twice a week, either in the mornings or the evenings. The classes are free of charge. You do, however, have to purchase the book and the workbook. And the best part is that we hope that you work for us. There was somebody I was just with a little while ago, and she said she needs to have off in the summertime and work this time of year. So I told her about our tax school.
And we keep you busy and out of the snow.
And that's right.
Right? I mean, it may be snowing outside, but we're inside nice and warm. And, you know, whether you work for us in our offices or we have virtual opportunities as well. So we'll talk about that as the season progresses. All right, I'm Esther Gulius, the Tax Lady, 803-0930, 803-0930, star 930 on your cell phone. We got a couple quick questions coming out of the chute. You can talk about anything you want, but we're going to kind of concentrate on New York State with our part. So we have Chris from Kenmore. Hi, Chris.
Hi there. How are you doing today?
Good. What can we help you with?
Well, I own a small business. Up until this year, I actually never had employees. I just have a few people that work a couple of hours, so I just 1099 them. But I'm wondering if I qualify for the ERTC with contractors.
Okay, so it's got to be wages, all right? And you have to be very careful that the people that you're hiring are that you just can't indiscriminately say, I'm putting them on a 1099, because that's not how it works. If you exercise control, give them the supplies to work with, tell them to come in and when to come in and come out. They can't substitute what they're doing with somebody else, like they just call in the morning and say, Chris, I'm not coming in, I'm going to have my mother come in and do my job. I mean, if that kind of stuff is the situation, you need to look into putting them on payroll. It's not difficult to put somebody on payroll, but it can be very difficult. And wouldn't you agree, Tiff and Chris, if they get audited by New York State?
Oh, definitely. Employees is one of the things they look at very carefully. But the ERTC is the employee retention tax credit, so you wouldn't even be eligible for it because you don't have employees.
Right.
Got it.
So the first thing you should do is make them employees. But secondly, I think you missed you missed that window where you could have gotten that credit and saved some of the payroll taxes. So for those people that are listening, if you had a 25% reduction in gross income from the first quarter of this year versus last year, you could have gotten a substantial credit on your payroll taxes. And I think a lot of people have missed that. So if you're somebody that has employees and you did suffer a decrease this first and second quarter, you may have a large credit coming on your payroll taxes, and you can call us. We'll be very happy to help you with that.
Chris, did you get the PPP loan? I'm sure you did, right?
I did, yeah.
Yeah, I can't talk to a business owner that didn't get it. It's a wonderful, wonderful thing.
Yeah,
If
you
need
applied.
help, Chris, we have a whole bookkeeping department that can get you set up. We won't do the payroll, but we can put you into contact with somebody. It's doing it right ultimately saves you the most money, and everything that you do correctly, is going to be tax deductible anyway. So even though you have to match half of their FICA and Medicare, that's all deductible as well. So and you want to make sure you get your liability insurance. Somebody get hurt on the job, that can cost you big time.
Yeah,
so
workman's
if you
comp
need
is
help,
like-
we'll help you.
Yeah, workman's comp penalties like
Yeah.
$200 a day per employee.
Right, you just don't want to go there.
Very good.
All right, thanks, Chris. And
Good
then we
question.
got and Bob hung up, right?
Bob
Yep.
hung up.
All right.
He must
So
be
let's
doing
talk before the break here about New York State. First of all, the New York State return, even though the income they follow the income from the federal, but a lot of the tax laws are decoupled from the federal. So what does that mean?
That means some things that are not deductible on the federal may be deductible on the state, and vice versa. Some things that are deductible on the federal might not be deductible on the state.
Right. And so
so
you
they're
got
not
to know
following
that. So
suit.
you would do that subtraction or that addition depending upon what you qualify for, right?
Right. Yeah. Like, so now what it means the IRS has their set of rules and New York State has their own
theirs.
set.
So let's talk right away. One of the items that's deductible on New York but not on the federal would be alimony, right?
Right.
Yep, that's right. So on the federal return after 2019, you can no longer deduct your alimony, and the person who is the recipient doesn't have to declare it as income. But New York State is just the opposite. After 2019, if you receive alimony, you still have to include it as income, and the person who paid it can deduct it as income, and that's a big one, and it's
That
very
is a very
confusing.
big one. So if you're somebody that didn't claim your alimony and you received it after 2019, and you didn't know that on the state of New York it is taxable, at some point in time they're going to match up that federal return against the New York return, and becomes a problem.
Right. And again, that's for divorces that started in 2019.
Right.
So
that's number one. Number two, pension plans. I think this is one of the things that people really miss a lot. On the state of New York, even though it has very high taxes, they're very friendly. They're very friendly to retirees, many retirees. And we're going to talk about that after the break. We're going to take a short break. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on the cell phone. Text us at 716-8030930. See you on the other side with the pension cliffhanger. Hey, to us, you are family. To be treated like family is just so important. I mean, I'm a consumer too, and I will tell you, if you can find a phone number on a website, good luck. Or then you get in the queue and they say, to make your time more expeditiously handled, why don't you leave your phone number and we'll call you back? They don't call back. But to us, your family, and whether we did your return or not.
That's what I was going to say.
If you're getting love letters, you got questions, you can call us. I'm sorry, Tiff.
Oh, yes, that's what I was going to say. People lately have been thanking me for calling them back, and you're like, wow.
I know. Thank you for letting me talk to you.
Thank you.
Because because there's nothing like fluid communication.
Yeah,
right?
that's right.
Where you say something, I say something, you say something, rather than texting, Okay, so we want to go back to pensions. All right. On New York State, all publicly funded pensions are tax-free regardless of your age on your New York State return. So if you were working for a local municipality, if you work for the county, if you work for the state, if you work for the federal government, everybody that gets any of those pensions are completely tax-free on the federal return. I mean, on the state return. It's taxable on the federal. But if you don't back it out, they will let you pay taxes on it. So if you're somebody that hasn't taken it off and you have a state, local, municipal, or federal pension that was federally funded, that is tax-free on the state, right?
Yep, it is. And I've seen this missed so many times. And then we also get lots of callers who are like, you know, I'm a New York State retiree, but I'm thinking of moving to North Carolina because the taxes are going to be cheaper there for me who's a retiree. But not necessarily, because as you alluded to, New York State is kind to retirees. And so
that's true. I mean, it is true. Now, North Carolina, I think they tax them on their pension. Isn't that correct?
Yes.
You remember,
yes.
Chris?
They do. It's North Carolina
I think
or
they do.
something.
Yes, yeah. North Carolina has
so
like
you may
a
get a tax
$4,000
break on your property taxes, but you're going to pay on your pension.
Right. And then they also have their vehicle, the personal property tax credit. And
right. So if you're moving
not credit, I should say.
to a tax-free jurisdiction, I mean, like Texas, I can think of Tennessee, Texas, New Hampshire, Florida. Those really are tax-free on the state.
Right. Yep.
Okay, so if you don't have a federal, state, local, municipal, or federal pension, then part of it may be tax-free as well. Now, how does that work?
You can exclude $20,000 per person per year, as long as you're over the age of 59 and a half. So it's a subtraction, and New York State allows you to subtract $20,000 for one person.
The first $20,000 each one of you receive. So on a joint return, the husband's spouse could have pension annuity subtractions up to $20,000, and the wife could have pension and annuity exclusions up to $20,000, or $40,000 if they both had that much in pensions and annuities. Right?
That's right.
Right.
Exactly.
So that's cool. And again, if you didn't do it, you overpaid. Amend your return. You got money coming back. But they'll only amend how many years?
3 years.
3 years, right.
Yep.
And then fourthly, so we got alimony payments are taxable on the state, tax deductible if you're the payer, taxable if you received it. Pension plans completely tax-free, federal, state, local, and federal. Pension plans that aren't publicly funded, the first $20,000 is tax-free if you're over the age of 59 and a half. How about if you inherited a pension from somebody or an IRA from somebody that's over the age of 59 and a half?
You get to You get to take that $20,000 exclusion spread out over the recipients who receive that pension. So
that's correct.
But
And limited
oh
to the
gosh,
20.
Is that often missed or what? Right.
That's often missed.
Yeah.
Right.
Yeah.
So if you're somebody that inherited a pension and you're taking periodic payments, but the person who funded it was over the age of 59 and a half, then that's a subtraction on New York State.
Right.
Up to 20, right?
Right. Yep.
All right. How about Social Security?
That is tax-free on New York State.
Completely.
Hip, hip, hooray. Yes.
So even on the even though you might have paid on the federal, on the state of New York, that's a subtraction.
Yep. Very kind.
Right?
Yep.
Interest from federal obligations. So I have a
Schedule E bonds.
U.S.
double
savings
E
bonds.
Yep. Yeah, tax-free.
Tax-free on the state. You got to back it off. So it carries forward, but you have to do the subtraction. How about employee business expenses?
Those are potentially deductible on the 2106 on New York State.
Right. So on the federal, if you're an employee and you're driving all around creation, you cannot take your expenses for travel or the expenses for your job or office and home. However, on the state of New York,
You can.
if you can itemize, yes, you can.
And the reason I'm chuckling is because my daughter is learning taxes right now, and Chris at the kitchen table teaching her about job expenses, she said, but you told me they're not deductible. Well, that's right. They're not on the federal, but they are on New York State. And she's like, oh my gosh, this is so confusing, right?
Right. And again, especially if you're an outside salesperson, over-the-road trucker, and you're on a W-2 and they aren't reimbursing you for your expenses, what used to be deductible on the federal is no longer deductible on the federal. However, the state of New York allows you to take those expenses as an itemized deduction.
Right.
All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930, and we have a text, right, Tiff?
We do have a text. The text says, Esther, my two daughters who are dependents go to college in 2020, and they made about $19,000 between the two of them. I just included this in my income. Is that right?
No.
Yeah.
Not
No.
at all. Completely wrong. So I don't know who this person was, but if you included your daughters, and believe me, the IRS doesn't know. Right. When you put the extra 19 on, they don't know that you didn't get those wages. No, your daughters file their own returns.
Right, which is so silly because if you do that, it could preclude you from getting certain credits. It could knock you out for...
Well, and not to mention if they're in the 25% bracket, look at how much they're going to pay an extra $5,000 in taxes, federal and state, right?
Right, so just like Esther said, make sure you amend the return, and they would file their own returns, and they would indicate that they're dependent.
And they won't pay any taxes, will they?
Nope.
Because the standard deduction is higher than half of it's more than 10,000, so they won't pay any taxes either.
Now
they will pay on the state, but they won't pay on the federal.
So Chris usually throws the monkey wrenches, but I'm going to do that. And now in 2020, a lot of my people who had dependents were breaking them off and having their kids file their own return because they would qualify for all the stimulus money. And so if this person's a high income
whoever wrote this text really messed up. So you, whoever you are, need to call us so we can straighten it out, because you have big refunds coming and maybe your kids have big stimulus coming. So no, your kids that you claim as dependents, you do not put their income on your return. Your return has income that is your income. The only time there's an exception to that is if there's unearned income. You guys want to explain that the kids have?
Sure. The unearned income, everybody just thinks of interest and dividends, but that also can be scholarships. It can be unemployment. So there's a lot of different things for unearned income. And what that does, if that's over $1,900, that triggers what's called the kiddie tax, where that means the children will have to pay at the parents' rate. So if the parents are in the 24% bracket, that income in excess of that $1,800 is going to get taxed at the parents' rate of 24%, not the 10% that the kid is in.
Now, let me just further make this poor person sick to their stomach. When the IRS gets the W-2s for your kids, where the income you put on your return, and they don't know that it was your kid's income, they're going to send you a bill of, in the state of New York, well, for sure, for the money that wasn't, taxes that weren't paid for New York State, because the W-2 came in your kids' Social Security numbers,
right?
And they're looking for a tax return for with your kids' Social Security numbers. So, right?
Right. Yep.
All right. Let's see. I got a couple minutes before we got a break for news. So
we got another.
We got several texts.
Okay. Well, let's do a quick one.
Right.
Most people say, "Oh, why do your state retirees pay no state?" Not fair. Well, back in the day, public workers made half what private sector made. I started with the state in 1982 at $10,000. Department of Labor took job for benefits, lost job at steel plant. 1980 made $30,000 a year there. So I guess his point is New York.
He had so little wages that was part of the perk.
Right. Which is so
well,
true.
And now, of course, the shoe's kind of on the other foot, because there aren't very many privately funded pension plans, and state, federal, municipal, and federal employees really are very blessed to be able to have publicly funded pension plans.
Yeah, I know.
But this has been,
here,
for as long as I've been in New York State, this has always been the case.
I mean, Catholic Health is on strike right now because The workers are on the line picketing because one of the things Catholic Health wants to do is get rid of their regular pension and switch it to a 401k. And so they're out. That's one of the things. And so I say kudos for them, and they're digging their heels. They're drawing a line in the sand, and I think it's a fight, and it's a fair fight, right? That they should be entertaining.
I'm not taking a side. All right. So, did we have another text we want to do before
we
you're
do?
for news?
Do you anticipate another 10,200 in unemployment?
No. The
allowances?
10-2 unemployment was last year COVID unless something weird happens with COVID again and they shut down all the businesses and they start paying everybody that exorbitant unemployment again. I don't see any $10,200 exclusion coming down the pike. You guys, do you?
No, we need people back to work, right?
We do.
Yep.
Right, absolutely.
And unemployment has stopped for all those people, so I can't see them. And it was no $600 extra a week people were getting. So I think, and that's what the 10-2 was last year, was the federal additional.
Right, and those of you that got the larger refunds that you shouldn't have gotten when they did the computation and they did it incorrectly, we're still finding out whether either they're going to straighten it out and ask for the money back, or else we're going to start doing amended returns for the people that didn't get this extra bonus so it'd be apples to apples, and that's coming down the pike. So I'm Esther Gillies, the tax lady. 8030930, 8030930, star 930 on your cell phone. Our text is 716-8030930. We're going to break for the news. We'll be back on the other side. Hey everybody, this is the tax lady from EG Tax, joined in studio with Tiffany Fabian, Christopher Fabian, and you, and any of your questions, 8030930, 8030930, star 930 on your cell phone. Our text is 716-8030930. We certainly want to help you. And we're talking specifically today about the state of New York and some of their issues. But again, this is open lines. You can talk about anything you'd like. We, except that maybe cooking and baking. I'm not into cooking and baking, but everything else we can.
But
talk
you're
about.
a very good cook.
No, I'm not.
Yes, you are.
I hung up my apron a long time. I make reservations now. Why don't we go to Andre, who's been holding? And again, 8030930 is our phone number. Hey, Andre.
Hi, everyone. I was hoping you could answer. I need help with my question, but I think you'll know what I'm referring to. I have a partner. We sold a rental property this year with a substantial capital gains, not doing a 1031 exchange, but someone had explained to me that if we file something with the state, we have an LLC and an EIN, but if you file with the state by October 15th, and then deposit money, and maybe it's into the estimates by the end of the year, that'll help our capital gains.
Well, no, it's what they're talking about is the elimination of your penalty if you owe money to the state of New York. The federal and the state, it's a pay-as-you-go system. So when you make money that's going to be taxable that had no withholding, they expect you to make an estimated payment of what you anticipate you're going to owe so that they don't penalize you. Now, there's an exception to that, and the exception would be if you paid in at least as much this year as your liability was last year, and if that's the case, then there is no penalty. You can do an exception to penalty form for New York State and federal government, and they won't penalize you. So you want to make sure, if you don't want to make that estimate, to make sure that you have paid in at least equal to last year's total liability. You guys want to comment on that, Tiff, Chris?
Right, yeah. So, I mean, we could calculate it out for you so you know how much to prepay now so you don't get hit with that penalty. They still may, when you do your tax return, they still may calculate it out, even though the capital gains just took place. New York State and the IRS may say, well, you didn't give us money in April or June either. So, and that's where the 2210 comes into play, where you got to say, well, it was a one-time thing and it was this time of year. So
if you don't want it all messy and have them have an opportunity to write you, but then again, like Chris says, they could say you made us a third quarter estimate, but how come we didn't get first and second? But again, if you pay the right amount in, you won't be penalized by doing this form anyway.
Now, in years past, we've never paid into it. Like, we've always taken the K-1 and applied it to our personal. And
Right. Well, this would be what's on your personal return.
okay.
Because your capital gains is going to flow over
to
from the
your personal
partnership return to your personal return.
But how would I be saving money by filing this by October 15th and then getting money in by the end of the year? What would be different about
There's a penalty. They charge you a penalty for failure to pay your estimates on time.
The IRS likes their money in equal
And so
periodic
does the state of New York.
payments.
And so if you don't want to pay the penalty, then you have to prepay your taxes before
Throughout
they're
the
due
year.
because you earned them now and the taxes are due and payable as you earn them. Otherwise, they will penalize you.
Is that considered an expense on the federal then, the state?
It's an
It's an
estimate.
expense on the federal and the state.
It's not an expense against the income.
Okay.
It's a charge against the tax liability.
Slap on the hand.
It's like you're withholding through your paycheck.
Right.
Well, I guess my issue is I've always done it personally, given estimates, but we've never done it from the partnerships.
Okay, well, really everything from the partnership flows over to the personal. So it's actually the same, except now it's a lot more money.
Right. And so you have the choice and your partner has the choice whether or not to do it, because it's still going to be your personal side of things that pay the estimated tax.
That's right. So the incomes generated by the partnership produces a K-1. The K-1 then goes, you got, like you said, you have a 4797 and a Schedule D. That all goes over to your personal return. You have a total liability. If you haven't paid in at least what last year's liability was, then they're going to penalize you.
Okay. Thank you so much.
You're very welcome. And if you need help, we're there.
Yeah,
Monday
and I
through
just
Friday.
wanted to say, if your income was so high and, it's not that high for a rental person and you had suspended losses, don't forget to mark that this is the final year on that business, on that rental, and all those suspended losses will come alive.
Right. In other words, had you guys had income over $150,000 and the losses weren't allowable if you had them, those suspended losses then are now able to be used to reduce the gain. Right, Tiff?
Correct.
All right. Let's go to our text.
Okay, it says, Esther and crew, well, it appears Congress kicked the can down the road as the next government shutdown looms December 3rd. Will this affect Social Security benefits? Thanks,
No,
Mark.
all these public programs, they're automatic. They keep getting paid.
Yeah.
The news media, it's really sad because we've all had everybody cry wolf, cry wolf, cry wolf, cry wolf. The sky is falling, the sky. Then at the last minute they bail everything out. So, but all the programs that are they're automatically funded regardless of the government shutdown. So, I know that they scare you to death, but unless some unbelievable catastrophic event happens, you'll get your Social Security. Okay?
Right.
Good.
Yep.
All right. What do we got here?
We got Chris from Buffalo. Hey, Chris, how can we help you?
Hi. I was wondering about earned income. Who gets that?
There's an earned income credit, and the earned income credit is available on the federal and the state. The big earned income credit is for people that have dependent children that live in a home that they provide, and their income is from earnings, and their income is relatively modest. And really, with 3 kids, it'd be like around $52,000 or under that you would get the earned income credit. The big money is if you're making around $18,000, the big earned income credit, which is about $7,000 on the federal and $1,400 on the state. Then.
Right.
20%. So that's the earned income credit. Now, the earned income credit this year has also been extended to seniors, right, Chris? Tiff?
Yeah.
Right. So now, before for seniors with no children, it cut off at age 65. Now they made it to whatever age, till you pass away, as long as you have
As
earned
long as you're
income.
working.
As long as you're working. So if you're working at Walmart, Wegmans, Delta Sonic.
Or self-employment, if you're a self-employment
if
person.
you're working at EG Tax,
Right.
if you have wages, if you're single under $14,000, you would be entitled to a little earned income
Right.
credit.
But it's any money is golden, right? And this is a brand new change in the tax law, and I presume it'll really help seniors.
Okay, so as a senior, if I make about $6,000 in a part-time job like driving Lyft or something,
Yeah.
I would still qualify for
You'll
it?
get the earned income credit. Yeah, provided that now, if you got a pension of $40,000, then you would have made too much money. Do you have other forms of income besides Social Security?
I have a pension, which is around $15,000 a year.
Then are you married or single?
Married?
And does your wife have income as well?
No.
Okay, so you're right at the cusp. So you might get a small earned income credit, but it looks like because your income is so high from other sources, you won't qualify.
Oh, okay.
It's going to be close.
Okay. Yeah,
but make sure
it'll
if
be
you're
close. But I'll tell you what I would do is I would put that $6,000 in an IRA, right?
Mm-hmm.
Because that would knock down their wages.
Which you can do now. You couldn't have done that before.
Because once there's no limit anymore. You can put money into an IRA, which then would reduce your AGI.
Right, but I don't get taxed anyway because...
I know, but this would they would give you money. So it's something to look at. And again, you can give us a call. We'll be very happy to go over the numbers with you. Okay?
Okay.
All right. Hey, thanks, Chris.
Cool.
Okay. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. And we got Mara. Hi, Mara.
Hi. I recently went on Medicare, and I am 65, but I don't collect Social Security yet. I'm paying for my Medicare premium and after-tax dollars.
Mm-hmm.
Can I deduct the Medicare premium on my income tax?
If you can itemize, yes.
Well, I also have had some major medical expenses since I went on Medicare, and I was hoping to group it all together for my income tax purposes.
Right. But again, your total itemized deductions have to exceed the standard deduction. It's obviously a lower threshold on the state than on the federal. But
Right.
Are those deductible? Yes. Will you be able to deduct them? Maybe, depending upon whether you can itemize.
Yeah, are you single or married?
I'm single, and I do collect pensions, and they're tax-free under New York State. So
Yeah, so
All right. So it won't make any difference
the
on the
good
state.
I mean, and do you own your home?
I own I have a condo. I own it, and I also have a money market account, and the tax preparer rolls over my losses, which I don't understand. So I may just be on the threshold to itemize. I don't know.
All right. Well, give us a call. We'll work out the numbers and see how close you are. Okay.
Well,
And again, but the important thing is keep piling up those medical bills in 1 year if at all possible. Like for instance, if you got all these things, go to the dentist, go get your glasses, so you have a nice pile of deductions available to you to help the itemized deductions.
which is what I have to start my list on. Okay, that's great.
Absolutely. All right. Thank you.
Okay.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Wanted to talk here, going back to New York State, and I know we got calls. Miscellaneous itemized deductions, investment expenses, tax prep, office and home for employees are all deductible on New York State, not on the federal. But there are items which are not deductible on New York State, which are deductible on the federal.
Yeah,
Right?
that's right.
And the first one I could think of is a 414H payment. You guys want to explain that?
Yep. So if you work for the state or a municipality of the state, because someday your pension is completely tax-free on the state of New York, you have to pay into your retirement plan, and you're doing that through the vehicle of the 414H. So that's you're paying into your retirement plan, and
And they
every
make
year
you add it in as income.
add it
right?
as income, your
Right.
contribution.
So if you're making 414H payments, that's taxable on the state. You got to add it in. How about accelerated depreciation? Now, on the federal, you can do 100% depreciation on many things, but the state of New York doesn't allow that. They have slowed up depreciation. So what they do is they make you add it back in. Whatever benefit you've gotten on the federal, they make you add back that extra benefit because they don't allow it. right?
Right.
Yeah, I know you and Chris were working on a advanced problem, and I think Chris was beating his head about that, right, Chris?
Yeah, I couldn't get the computer to do it.
But he knew the right answer, but there was a break.
Right. And then the other thing is the standard deduction for dependents that's claimed as dependents on your federal return is much lower on New York State. So if you have a child that you're claiming as a dependent that has wages, for instance, they have to pay taxes if their income exceeds $3,100. Whereas if a regular single person was filing, their standard deduction would be $8,000. So that's another change on the state of New York.
Right. Yep.
Okay. Well, let's go back to the phones.
we want to go
Do we want
to
to
take a break first?
Oh, yeah. I guess we got to take a... So, hang on, Judy. We'll be back with you. We're going to take a short break. We'll talk to you on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on.
Hey,
now,
that's for sure. The Bills. I hope they win tomorrow again. Who are they playing?
They're playing Houston. And they are heavy favorites.
And they're here, right?
Here in Buffalo, yep.
Yeah.
In the pouring rain.
Oh.
But
Well, now you don't know.
it is Buffalo. It could snow. No.
Right, it could. But anyway, I hope the Bills do win.
Yes.
All right, let's go back to the phones. I was so rude to Judy. Hi, Judy. Hello, Judy.
Yes.
How are you? What can we do for you, ma'am?
Hi. I was wondering, I had a pension from my husband that passed away. It was transferred over to me.
Right.
And I also, last year, June, I started collecting widow's benefits. And I'm wondering, are those taxable?
All right, the pension is taxable. Are you talking about Social Security? Is that what you're saying you're getting?
Social Security widow's benefits.
Okay. So how old are you?
June of last year. And
Judy, how old are you?
$800 a month in a pension.
Judy, how old are you? Judy?
Yes.
How old are you?
61.
Okay, so you're getting Social Security and the pension, right?
Right.
How much do you get in Social Security every month?
$810.
And do you have and your pension is how much?
$1,005. No, I'm sorry. The pension is $810 a month, and the widow's benefits from Social Security are $1,557 a month.
Okay, so you're not going to owe any federal taxes, and you won't owe any New York State taxes either.
Good news.
Okay?
Now, yeah, I do have one question though.
Yeah.
It said that I could make up to $18,240 income a year.
Are you working?
Yes, I'm a contractor.
Pardon me?
Oh.
And they said that
She's an independent contractor.
Oh, all right. So you have other sources of income.
Right, just the $18,240. I'm keeping it at.
But you said you're self-employed.
Well, independent contractor, self-employed. Yes.
Okay. How much do you make there?
I think $18,200.
Right, $18,240 because I could do it more, but I can't because they don't allow.
Okay, well, that's the self-employment income has to pay the FICA. Do you have any expenses that you produce for making the $18,000?
Yes, because the drive and all the
All right, so you have mileage expense,
yes,
right?
Yes.
How many miles do you normally put on your car doing that?
It's about 96 miles a day, and I do.
All right, so here's the thing: you're going to include the $18,000 as income, then you're going to reduce it by your expenses that you are not reimbursed for, and
right.
So looking at if you're doing, is it all year long you do this?
No, just for 6 months.
So if you're looking at let's say 10,000 miles, then your subtraction is going to be about 6,000 off of the 18,000 for the travel, and plus any other expenses like maybe a cell phone, tolls that you do, all of that. But on your net profit, you're going to have to pay FICA, and that's going to make part of your Social Security potentially taxable too. So what I said in the beginning is not true. If you are a freelancer, self-employed, you have to file, and yes, you're going to owe some taxes.
Okay, but do I put down that when I do my taxes for this year, do I put down all of the pension, all of the Social Security, and all of my income?
You're going to do a Schedule C for the self-employment. You're going to put down your Social Security and do a computation to see how much of it's taxable. And all of your pension you have to put down as well. And any interest, dividends, and other source of income. What I'd suggest you do, though, Judy, we have a mileage book which we can give you, which will help you keep track of all your mileage and expenses. So if you want to call us, we'd be happy to give it to you, okay?
Oh, okay. All right. Yeah.
Thanks, Judy.
Get it, too, so I'll give you a call.
All right. Thank you, dear.
Well, she sounds like a busy person.
She does. She does. Thank God she's got something to keep herself occupied after the death of her spouse. All right. Other things with New York State, and I know we have calls holding 8030930, 8030930, star 930 on your cell phone. Our New York State credits. Now, credits are better than deductions, aren't they?
Definitely, because credits is money in your pocket, dollar for dollar. A deduction saves you what your tax bracket is. So if you're in the 12% bracket, $1,000 saves you $120, where a $1,000 credit gives you $1,000.
Right.
Yep.
All right. So the first one's the Empire State Child Credit. Now, how is that computed, and who qualifies?
The Empire Child Tax Credit is $330 per child between the ages of 4 and 16.
So weird.
And if you have, let's say you have 4 kids at home that are 5, and you don't have to file, what would you get with that?
You would get
$100 per child.
$100 a kid, or $500. And if you didn't have to file a New York State return and you had children that qualified, you have a refundable child tax credit coming on New York State.
Also, now, if you don't have to file, you will get the new child tax credit. No, the new child tax credit on the federal.
That's true. That's true. So, I mean, coming down the pike this year is a lot of money. The earned income credit is obviously on the federal, and the state of New York has a refundable earned income credit as well. Plus, there's an earned income credit for non-custodial parents. How does that work? And I know a lot of people miss this.
Right. So that's if you pay your child support through the New York State Collection Agency. You cannot write the check to the mother or the father of the child. It has to go from your paycheck to New York State, then to them. And if your income falls into line with the earned income credit, then you will get the non-custodial EIC.
So you don't have to have the kid living with you. You just had to pay through the New York State on time, right?
Right.
Be up to date. And then you get the earned income credit. I want to get to my call here. I just want to talk about the real property tax credit if you have rent, and you don't have to file, and you have a property that you own that's worth less than $85,000. There's a real property tax credit there's available in New York State. The college tuition credit for first 4 years of continuing education. Right, kind of piggybacks on the federal tuition credit. Nursing home credit. So if you're if you are a private pay in a nursing home, they are assessing a bed tax. That bed tax should not be assessed. They will get it back to you. And I believe it's 6% of the monthly amount, right?
Correct.
So that's so if you're paying $100,000, you have a $6,000 refund coming. Let's see, what else we got?
Should we go to Mike?
Yeah, I will, but hang on. So I got credit for taxes paid to another jurisdiction. So if you're working outside of New York State and you're paying taxes to like Ohio, you do the Ohio return and you get a credit on New York State for the taxes paid to Ohio. And now we'll go to Mike. Hi, Mike.
Hey, Mike.
Hi.
Mike, how are you, sir?
Good. Did that proposal go into effect yet, where anything over $600, a third party has to report it to the IRS? Say, like, if a parent gave their daughter a $1,000 wedding present and she puts it in the bank, the IRS is going to come back to check on you?
No, the banks are being in line to report if there's more than $600 given. This is what they want to happen anyway. The influx and egress and ex. In and out of money over $600, the banks are supposed to start reporting, and I know.
Right now it's
coming down the pike.
10,000.
But would you have, just like on the New York State?
You don't have to worry about you don't
bank.
have to do it. It's the bank that's going to do it, not you.
Yep.
You don't have to do it. There's no form you have to file. This is all a banking issue.
They ask you how much you spend in sales tax in other states and that.
Well, but that's been on there for years. This $600 is strictly that banks are going to have to start reporting to the Internal Revenue Service to keep track of your money, quite frankly, to make sure if you're not reporting all of your taxable income.
That's not in effect yet, right?
Not yet.
They said they're going to spend $80 billion on new IRS agents. I mean, would that everything?
Well, they're going to absolutely start doing more auditing. Yes.
Oh, okay, thank you.
All right, thank you.
Good
But
question.
I will tell you, not just auditors. The IRS needs to have
Customer
processors
service.
too.
Yes.
Yeah.
Right?
That's for sure.
Absolutely.
All right, other refundable credits.
there's a text really quickly.
I did a daycare credit. Daycare credit's a great big one. If you're
Huge.
paying for daycare for a child under the age of 13 or one that is disabled or a disabled spouse, that's a refundable credit as well. But the bottom line is New York State is not easy. There's lots of additions, lots of subtractions, lots of credits, and if you haven't been doing your New York State return and found out some of the things that we talked about, amend your return. You got money coming back.
The text says, "Thanks for reading my text. Bills are plus 17-point favorite versus Houston. Yay!"
Yeah, well, I never count my chickens before they hatch.
You get nervous.
It's when you think they're going to win and they don't, like that first game. Well, Anyway, and if you are getting letters, you need help. EG Tax is open this time of year 9 to 5. If you're Monday through Friday, you're interested in going to our tax school. Our tax school's second one is starting in October. It's great. You will learn so much about taxes. You can register online at egtax.com, or you can call us at our corporate headquarters at 632-7886. You guys have a final word to say?
Bills, and call the office and Amy will help you. She's lovely.
Yeah, all right. Have a great week. God bless the Bills, and God bless you guys. Thanks for listening. Bye-bye.